Okay, recording this video on Sunday, the 25th of June, 2017. Do hope you are doing well. Hope you had a great week's trading. So, going to talk about a couple of things in this weekend's video. The first one is professional bars and the gathering pattern, because we had a beautiful example of a gathering pattern on Friday's trade. So, going to talk about that and just amateur and professional bars in general. Second thing I want to talk about is the stock market crash warning indicator that's signaled this weekend. So, with the latest commitment of traders data that came out, we've got a little signal on that indicator, plus there's some information on the bonds chart I just want to talk about. It's not going to be one of my super bearish watch out kind of videos at all. Kind of got over that in the last couple of years. Don't care as much about kind of the overall direction of the market. I care more about the shorter term moves kind of these days. But anyway, just want to talk about that indicator and the signal that went off and some other information on the bond charts. But let's first of all talk about gathering pattern, because gathering patterns, when they pop up, are fantastic. Now, this is one of my setups. So this is the three time frames I'm looking at, the 500, 1500, and 4500 tip bar charts. I had actually a couple of questions this week. People were saying, are you using the multiple time frame chart indicators on these single time frame charts? They're used to seeing my kind of system view, which is the multiple time frame view, and then this kind of with the multiple time frame indicators just showing the professional and amateur bars and the momentum patterns. But they kind of asked whether I was using those same indicators on these single time frame views, and the answer is yes. I'm just going to show you that just really quickly. When you go in and format, this is the MTF, the multiple time frame version of the better indicators. This first setting on each of these is set to false. Actually, I didn't know you could do that just by hovering over it. So you can see MTF false. The next one down with better momentum 2. We've got MTF set to false. Let me actually just open these up because that's easier. Here we go with the inputs. MTF set to false. This setting in each of the indicators allows you to switch on and off the multiple time frame calculations. If you're looking at a single time frame, you just want the single time frame calculations, just set MTF to false and it'll calculate just the single time frames. So that's what I've done on these charts just by contrast. When you go to this and you look at these indicators, so better momentum, and go to format, you can see on the inputs MTF set to true. So I have two views of the world. One is the MTF view where everything's kind of all on one chart, or I like to look at the individual charts and just set that MTF to false. So anyway, if you're using the indicators, that's just a little tip. That's what I'm doing. But this is a gathering pattern. So this is today's Friday's activity on the 1500 tip bar chart. There was the open of the day. That was the overnight activity. That was the close on Friday. And there is a gathering pattern. Just beautiful. What have we got? 1, 2, 3, 4, and then 5 professional bars all sitting there under a resistance. You can get gathering patterns on the way down. So for breaks, downside breaks, kind of sitting at a support. But I seem to notice them more on my charts, kind of setting up ready for an upside break. And that is a gathering. So that is professionals getting ready during that activity under a breakout resistance level, getting set. They kind of move the market backwards and forwards and just absorb that volume. Better Pro-Am is showing the average trade size kind of bumping up. That's how we're identifying the professionals there. And so they're absorbing that volume, anything going on there, ready for that breakout. We had a nasty little kind of push down, kind of to freak people out. At that point there, it was kind of a move of about 1.5 points. I'd entered just before that. Was a long at 32.50. So this moved kind of nastily against that move, and I was thinking, forgot this wrong. And then it immediately just bounced out of that zone and took off to the upside, and that was a really nice break. But that little gathering pattern is professionals absorbing all of the selling that's going on there. They're moving the market kind of backwards and forwards, getting people kind of ginned up, wondering which way it's going to break, absorbing that volume. The average trade size kind of bumps up, and then it's ready for that explosive move kind of out of there. And then they start taking profits up here, and then we have a nice little exhaustion move, bearish divergence, and they're taking profits up here, and then bang, the market kind of corrects and goes the other way. It was a late kind of day trade. Normally, I'd say reversals happening before 11 a.m. So 11:03, so that was the 11 a.m. window there, and at that point we hadn't completed to a pullback to end of trend. So for me, that wasn't a classic kind of reversal that happened before the 11 a.m. window shut, but it definitely did kind of end at that bearish divergence and then took off to the downside. So that's a gathering pattern. I'll link below this video to a couple of other kind of instances and the explanation of the gathering pattern, but it's a really, when you see that kind of popping up, just look out for a break to the upside. We also had some pretty handy Rambo patterns during Friday's activity. So you can see here, beginning of the day, we sell off quite nastily, kind of taking off to the downside. And then we have a Rambo pattern here as we break into new lows. And that's the amateurs saying, getting short at that point here on that extreme, thinking, oh, we're going for a big downside move. I'd actually got in short at 31.75 at the beginning of the day. And then when I saw that Rambo pattern kind of pop up, I was like, that doesn't look good. We reversed all the way back to here, and I got out of my short trade. It almost hit the 4-point target down here. I think we were a half point off that, and then reversed all the way back. So I only got out with a half point on that trade. But it wasn't a classic in terms of like an exhaustion sell down here. It was a flush pattern, flushing out the last of the sellers. But when you see a Rambo pattern on the 1500 tip bar chart, just watch out. Because they can be pretty prescient to show you where the amateurs are being wrong-footed. Same kind of thing here towards the end of the day. We have Rambo patterns kind of coming down here, thinking that we're going to continue down on this downside move for the rest of the day. They get wrong-footed and kind of moves up kind of quite sharply towards the end of the day. On the MTF chart, we had another Rambo pattern pop up here. You can see those during the intraday activity towards those highs. So those are amateurs right at that extreme, kind of buying that breakout, expecting it to kind of keep on breaking to new highs, and no, it kind of falls off and then just tests into those highs, blue professional bars, and then drops again. So on the MTF chart, you can see Rambo pattern here, couple here. There's one on the way down here, but this one was the real one, kind of on the way down there, and bounces from there. So amateurs and professional bars, they're really important, and that's a gathering pattern on the professional bars. The Rambo patterns on the amateur bars, just keep an eye out for them because they're pretty handy. I want to show you something just I've been playing with, not released it at all, but it's using the professional bars to show you intraday trends. Trend indicators are kind of the holy grail. Everybody wants like the perfect trend indicator. And over the years, I've kind of worked on a bunch of different variations. The first one I kind of worked on was a better trend line, which was an automated way of plotting trend lines on a chart and using that to determine uptrends, congestion zones. These white bars are congestion zones, and then green bars are downtrends. That's kind of an interesting way of doing it. Then I started incorporating volume, and this is better X trend, where we're using the range and the volume to show the trend. So trends start off with explosions of volume, and then trends end with exhaustion volume, and so you can use those extremes in volume and range to determine the trend. So you can see this kind of trails a stop based on that explosive and that exhaustion type volume, and that's quite a nice way of kind of looking at things. Then obviously the latest indicators I've been using with the multiple time frames is using support and resistance on multiple time frames to determine trend. This looks a little bit fussy because there's a lot kind of going on there on that chart, but if you look at kind of the red and the white bars, they're basically showing you downtrends, strength and weakness on those bars. Intraday, you can actually use the professional bars to show you where the professionals are getting in and getting out, and trailing a stop based on that. So this is Friday's activity, and I would say look at the highest time frame, the 4500 tip bar chart with those professional bars to see what the professionals are doing. That gathering activity that we had, this is the open on Friday, this is the close on Friday, that gathering activity, which was 4 or 5 bars on the 1500 tip bar chart ended up being one nice big blue professional bar on the 4500 tip bar chart. And as soon as the high of that was broken, bang, we're into an uptrend. And so you start trailing a stop based on the lows or the highs of those blue professional bars as they go. And you can see breaking out of that took us into an uptrend that then when we had the exhaustion move here at the highs, the blue professional bars taking profits, bang, the reverse kind of go the other way and we can trail a stop on the way down. And then here the professionals kind of step in as soon as the highs of those blue professional bars get taken out, bang, we can trail a stop going like that. So, you know, intraday, it's kind of an interesting technique of kind of using a trailing stop kind of technique to determine trend on the 4500 tip bar chart and just using those professional bars as a way. It's not perfect, you know, there are some areas where it kind of jiggers around a little bit, but yeah, it's kind of interesting. I think it's always worth just seeing what's happening on that 4500 tip bar chart and the professional bars. Anyway, so there we go. That was just on this indicator. I've not released the code on that. Don't know if I will. It's just something that kind of proves a point in terms of, you know, looking at these professional bars on the 4500 tip bar charts being really important. Anyway, so there we go. That's a gathering pattern, professional bars, amateur bars. You know, look for those signals to find out what the professionals and amateurs are doing. Stock market crash warning indicator. Here we go. So not talked about this for a while. Doesn't signal very frequently, 2 or 3 times a year, and it's not perfect by any means. There's a couple of caveats to do with this stock market crash warning indicator. The first one is it's based on commitment of traders data for the SP contract. So the ES is the E-mini, that's what we all trade. That is a very good intraday kind of futures contract. It's 80% of it is used for intraday trading. Mostly what you see in the large contract, the SP contract, is people taking long-term positions. It's 5 times the size of the E-mini contract. Arbitrage opportunities are kind of zeroed out between the two contracts, so they're matching in that perspective. But over the years, there's been less and less volume going into the SP contract, and eventually I think one day it'll die. So whether the signals are still kind of, you know, useful or important on the SP contract, I think it's kind of declining in usefulness because of that. However, we still have, you know, the stock market crash warning indicator, which was basically 3 lines of code using only the SP commitment of traders data to signal crashes and corrections. And you know, when you look at it, it's been pretty handy to indicate those kind of corrections and crashes. Corrections are 10% down move in the stock market. A crash is a 20% or more kind of move in the stock market. Not every warning signal ends up being a correction or a crash, but pretty much every correction or crash that we have had has been preceded by a warning signal. So we have some periods where, you know, warning, correction, crash. Warning, correction, and then we get warning, 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 nothing happens, warning, correction, and now the latter kind of move over the last 2 years, we've had 3 warnings in a row, and this is this weekend's activity where bang, the warning kind of comes out. Code's free, it's on the website, you can check it out, but it's because the commitment of traders data kind of flipped from positive to negative here. That's what's caused this warning indicator, that kind of move down in the commitment of traders. So that was just, you know, kind of interesting, curious. I mean, this one in 2016 definitely led to some weakness, but didn't end up all the way being a kind of correction. This last one that we had, yeah, we kind of went nowhere for a couple of months, but didn't lead to anything like a correction or a crash. So this one's kind of popped up. Now, the reason I'm kind of pointing this out this weekend is something else kind of happened on the bond market this weekend, and I just wanted to kind of draw your attention to it. This is the bond oscillator chart. This is the one I normally show, which is looking at the SPY versus TLT. So on TradeStation, you can't put 2 contracts or 2 symbols on the same chart when they've got they're from different time zones. That's kind of a, you know, a limitation of TradeStation. So what you do to get around that is you use some ETFs that are both coming from the same exchange. So the SPY, obviously tracking the S&P 500. TLT, this is tracking long-term bonds. So you can put those on the same chart and then use an indicator to calculate the momentum between the two. I find this useful to highlight areas oversold, overbought, overbought, oversold, and so on. The other way you can use this indicator, so that's on a daily chart, is you can use it on a weekly chart. And you can set it up like this. The settings for this indicator go like this. So what we've done is we've used a look back period of 20 weeks. The extreme value, instead of having a range, I just set it to 0. And then we have an opportunity to invert the data, the TLT data, but I don't do that on this chart. So what we're looking at is the difference in momentum between the stock market and the bond market. So you get periods where, for example, back here, you can see the stock market has been strong leading up to that peak, and then the bond market has been weak. So we get periods of overvalued stock market, undervalued bond market, then they tend to correct, and so on. But with this so that's kind of using the indicator in the same way as this kind of oscillator version of it, looking at those extremes of highs and low. But you can also use the zero cross line as an interesting kind of trigger point. When the indicator is showing 0, what that says is over the last 20 weeks, the move in the stock market on a percentage basis, the momentum move on the stock market, has been the same as the percentage move, the momentum move in the bond market. So we've got at 0, when we've gone from a period of being above the 0 line, the stock market is strong and the bond market is both strong. And they've both been moving the same kind of percentage move over the last 20 weeks. That's when we're at the 0 line, that's what that means. Now, I've looked back over the years at stock market crashes and tried to find correlating symbols, other markets, to see what's the US dollar been doing prior crash, what has gold been doing prior crash, what's copper been doing prior crash, and so on, to see if there's any kind of patterns and so on. I've not found anything particularly useful. I'm sure there are analysts out there that would say, oh, you're wrong. I mean, the copper is fantastic for identifying all kind of crashes, and this is how you use it, blah, blah, blah. My analysis, I haven't found anything that's, been useful in all instances. That, sometimes you'll find the US dollar, helpful, and then at other times it's signaling something totally different. But one of the things that I have seen is that prior to kind of corrections and crashes, as the equities market is moving up, the bond market is also strong. And what that shows to me is that as the equity market is making new highs, people, professionals, the smart money, taking profits and just moving that money into bonds. So that's why you get a move up in the bond market and the stock market at the same time. Usually happens for like 2 to 4 months. I'll link to a video where I've shown some kind of previous analysis where that strength has to be, it's not just a short-term thing. It's not just over the course of a few days or a week or so. It's long-term. It's 2 to 4 months. Strengthen the bond market, strengthen the equities market. Equities market kind of making new highs, people taking profits and moving that money into the bond market, and we get the two things strengthening at the same time for a considerable period of time. Because this is a weekly chart, our look back period is 20 weeks. It's a nice kind of long-term view. This indicator triggers when it moves kind of below the 0 line. So when we get signals crossing from positive to negative, the paint bars turn white. So you can see here that into this move, or into all of these moves. So into this high, we had a 0 cross kind of going on here. This is the 06-07 kind of rally that led to the last big sell-off that we had. And you can see it triggered there. Then we had here, same deal, triggered at this point, and so on here. There have been some signals where we've kind of not gone anywhere for much. We had some weakness, but not kind of considerable weakness. Last time we kind of crossed, we just mucked around the 0 line at this point here and kind of went nowhere. But there have been a couple of instances. This one, you'd say, kind of we really didn't go anywhere much there either. But the reason I'm highlighting this is because we got these two things kind of going on at the same time. The commitment of traders popped up with a warning signal, and the long-term bond market oscillator has crossed the zero line, and it shows that we've had this period of strength in equities, strength in bonds, where we could have some professional profit taking going on, and that's what's led to the strength in the bond market. Now, let's also just talk about the timing of this. We're coming up to a seasonality kind of indicator with 4th of July weekend. Coming into the 4th of July weekend, the market is usually pretty buoyant. People are, it's summertime, we've got a long weekend kind of coming up, people are pretty happy, and the stock market tends to reflect that. So I'm not suggesting anything's going to happen imminently. I'm just saying just watch out. Just, just keep it in the back of your mind. We've had those two kind of things go off. We've got 4th of July kind of where we'll have a little bit of strength and bounce in the stock market, presumably. And this is what the seasonal indicator is showing. So we have a little bit of weakness leading into that 4th of July weekend. But as soon as July kind of comes along, we have that seasonal pattern here where we have quite a little bit of strength kind of going on. This last kind of downturn that we had, that was driven, I'm pretty sure, all that weakness, that was Brexit. Because that was almost exactly a year ago that we had Brexit, and I think the stock market kind of overnight was super weak as a result of that news. So we'll just kind of have to wait and see. I'm keeping it in the back of my mind, see if anything kind of pops up that shows, kind of confirming signals in terms of supports being broken. But so far we've got nothing like that on these kind of long-term charts. Anyway, so there we go. A bit of a long video this weekend. Apologies for that. I might tag on that gathering pattern on Friday just to show you what it looked like while I was trading it. Hope you traded well, and looking forward to next week. All right, I just got long 32.50, long 32.50, pretty crappy entry. Jumping in on a breakout. That's okay. 28 was key level, kind of down here. Had been the last couple of days, the overnight low, daily low during Wednesday's trade. And surprising, no blue professional bars kind of came in down here. We've had support kind of coming. So running support to resistance on the 4500. We did at least on the 500 kind of bottom out with exhaustion patterns, blah, blah, blah. And now we're in the midst of putting in, say, a short covering rally, just freak everybody out, kind of go really press higher, run the stops, go for an exhaustion pattern. At some point this will come in here. I hope it happens a little bit higher. A couple of blue professional bars. We need to break through this to get us into a strengthened trending move. So that's why I'm jumping in. So alright, that's going to signal. So that'll be a double resistance up here. So it's going to be absolutely key. Okay, blue professional, there it is. Blue professional down bar. Alright, now we've got to go immediately above the highs of that and break this thing up. Go run trailing stops and whatever. Alright, that's good. Another blue professional bar kind of came in. It's almost like a U-turn. Got in on the way down and pushed it on the way up. Now we need to break above here. 32.50s and 32.75s. Kind of a little bit of a gathering. Just bust through there and all of a sudden freak people out, so they have to cover, chase, whatever, and then this will break into strengthen an uptrend. Come on, no, don't give it back. Do it straight away. Alright, here we go, we're going for the break. That is a gathering. 3 blue professional bars, tight as, under resistance, kind of almost like the high for the day, just a fraction under. Okay, blue professional bar coming on 4500, and we're just going to jam it through resistance, bang, this thing will take off. So it's 4 blue professional bars, 1, 2, 3, 4. Right, tight together like that, beautiful. And show us a similar thing on the MTF chart. And there we go, we're just broken into strength. Above, come on, keep it going. Give it up, just launch us up to the upside, and all of a sudden everybody's like, I thought this was a down day. And 36.50 is my target. Let's leave it there just for the time being. Wow, well, that was interesting. They just jammed it down, and then we almost, so much supply came in at 31.75 here. Just endless supply, just down and down and down. And then we finally ate through it and bust up. What's interesting about 31.75 was it was this breakdown level support. It's where my first short was. So clearly that was an important level that we needed to kind of chew through, bust up the other way. And now what we've got is it's actually a low risk entry point coming at this level. So break back above resistances up here, 32.75s, 32.50s, breaks into a confirmed uptrend there. So we did a hell of a lot of work to get through there. Let's hope that was the last of it, because that gathering pattern there is I won't say a monster, but it's pretty substantial. 5 blue professional bars just sat there. So come on, let's get this thing going to exhaustion. Buy on the 500, bust ourselves out of this. Alright, finally we bust through 2 time frames, confirmed uptrend, that's why it's turned red, it's not printed. There we go, the line's just printed. So hopefully we'll get ourselves into this trend move now. Seemed like a lot of supply kind of coming in at a couple levels at 33, at this 31.75 level. Anyway, so we busted up through this resistance, and we're on our way. All we had was flush patterns kind of down here, and that Rambo looks pretty good in retrospect. But anyway, let's go see where this goes. Should be going for like an exhaustion pattern back to 33. All right, just move my target out to 37.50. Just it seemed to get to 35s pretty easily. We're at 6,000, 8,000 type read. This is the thing that would show kind of blow off. And more pullback into trends or something like that. First blue professional up bar, kind of going on 1,500. Alright, got to 36s. Alright, that's a 9,000 read. More blue professional bars, 3 of them kind of coming in there. On the MTF chart it showed exhaustion, but it's even gone even higher than 9,000 read there. Have I been greedy by moving out to 37s? And we've still got to go pull back under trend, so let's hold, let's just see what happens. Alright, initial target 36.50 has been hit, and target's 37.50. Still pretty elevated levels, which is good, and we've not gone to pull back under trend yet. 37s touched, 37.25. Ooh, a lot of supply at 37.25. Order filled 37 even. No, just moved it out fractionally there. I suppose it'll get touched any second now. But that is okay. So that's for, oh, my math is so bad. 4.5. Yeah, 4.5. Excellent. And the first trade was just a half point. So 5 points, 2 trades, done for the day. 9:44 a.m. Eventually we got there. All right. Be interested to see where this ends up for the day. But yeah, quite happy with that. Good. Done.